In this video I'm covering the key areas you should familiarize with for an efficient correspondent bank's due diligence. So let's jump right into today's video. Welcome to FinCrime Agent, my YouTube channel where every week I publish a new video to boost your awareness about anti-money laundering and financial crime prevention. When a financial institution has to provide a banking service in another nation where they don't have any branches or a significant level of business, often they decide to contract with a lender, a second bank that will provide financial services in that country to do the work that they can't do. In order for the foreign bank to do business inside a country, a branch must usually be formed, and this is of course an expensive process, particularly if the bank has a relatively small business in that country. So that's a high level why correspondent bank relationships are initiated and established. If you've been around financial crime prevention for some time, you probably know already that correspondent banking relationships are seen as more exposed to money laundering and terrorist financing risks. So why is that? The core of the risk here is that badly managed correspondent banking arrangements can provide clients of another banks with potentially poor AML CDF systems and controls a direct access to the global banking network. This is because the very nature of correspondent banking requires for a financial institution to process transactions on behalf of clients of another financial institutions, and sometimes with very little knowledge of those clients. As you can imagine, this process can create a lack of transparency, and therefore enhanced level of correspondent bank's due diligence is required according to FATF to ensure money laundering risks are efficiently controlled and managed. So let's see which are the main factors a financial institution must consider to complete due diligence on correspondent banks. The first area to review for correspondent bank's due diligence is understanding the respondent bank ownership, controls and management structure, including any parent company that is involved. For example, when the respondent is publicly owned, where are the shares traded? Or when privately owned, who are the actual beneficial owners? You can then assess the location of the respondent banks, the organizational structure, and whether senior management and other associates in relevant positions are classified as politically exposed people. So the next phase would then be to run your correspondent bank due diligence in relation to the nature, size, and complexity of the respondent bank. But before describing the next step of correspondent bank's due diligence, if you're finding valuable my content, press the thumb up and leave me your feedback in the comment section down below. So thanks for doing that. So the risk a respondent bank poses to its correspondent bank are usually reflected in the kind of business he operates in and the kind of markets he serves. So having an accurate assessment of these areas will be extremely important to build a broader correspondent bank due diligence picture. Depending on the actual location where the respondent is based or where he operates, there could be a number of risks associated to it. As part of your correspondent bank due diligence, it's important that you address the presence and actual effectiveness of any AML CTF regulations in any foreign nations where the respondent or any parent company is located, as well as the respondent's compliance policies and procedures with regards to such law and regulations. As part of this process, you should also be able to determine if the respondent banking is subject to AML CTF regulations, and if so, whether they comply with the CDD and KYC processes for its clients and implement further control in accordance with the FATF or similar standard that they exist in those jurisdictions. This is particularly crucial if, as the correspondent bank, you will also provide a Vostro account directly accessed by the customers of the respondent bank. In respect to AML CTF rules and oversight, as part of your correspondent bank due diligence, you should always evaluate the respondent AML CTF controls and compliance activities to ensure they are adequate and effective. To fulfill this requirement, you could also choose industry surveys such as the Wolfsberg Correspondent Bank Due Diligence questionnaire, for example, or any other tools like that one. And last but not least, you will need to assess the reputation of the respondent bank. This will imply researching the organization against any adverse media or publicly available information for any investigations against the respondent bank, possible failure of their AML CFT obligations, or other financial crime related issues that could be available to the public. So now that all relevant information for your correspondent bank due diligence are gathered and assessed, the final approval will be provided by a senior officer with the power to make actions impacting the risk exposure of your organization. With the senior management approval granted, the respondent bank can now be finally fully onboarded. I have published before a video covering the 5 pillars of an effective AML compliance program, so if you got this far in watching this video, you would probably also enjoy and be interested to watch that video, and therefore I will leave you a link to it right at the end of this video. And if you're finding valuable my content, remember to press the thumb up on this video and leave me a feedback in the comment section right below. And lastly, thank you for watching. I hope you enjoyed this video, and until next time, see you soon.